Hello, fellow traders. 'Tis I, the Rumpled One. It's Friday, August the 16th, the year 2019. Let's talk trading. It's time for the weekly wrap up. And I know each and every one of you traders has used money and risk management. You're practicing it on each and every trade. So for the week, all gaps filled. The Euro, Australian, Euro, Aussie went to the upper wick zone, came out of the upper wick zone, went out of the lower wick zone on the previous week. So there is money to be made trading wick zone trades. And for those of you who need understand what the wick zone is, see here, this is the candle top. The distance between here and here, you see this? That's called a wick. You can't really see much of a bottom on this week, on the previous week, but you can see these other candles, like this one right here. This is the bottom of the candle. This is the low, and that long line there, that's the wick. And so when price gets in the wick, price usually doesn't like staying in the wick. You can see here, if you look back and forth on each candle, you can see just how true that is. Even when they have these big wicks like this, you see it went through there. Here was another nice big wick. It went through there. So, and even here, it went up, but it didn't go out this end, but it went up and came out this side. So it's one of the trades, one of my favorite trades nowadays is the wick zone trade. And it's a breakout trade. So in other words, you go long here, you go short here, and you're not looking to trade inside. You're looking for to trade outside the zone. Of course, you can trade inside the zone because sometimes you can get things like rat reversals. And the wick zone also works on the daily. Now, here on the daily, as you can see here, we opened below the previous day's midpoint, so that gave a short bias. And remember, we're looking to go short on the Euro AUD, especially if we're going to hold overnight. But we've got it, we're down on the week and we're down on the day here. So closed to open 138 pips for those of you who like to trade the weekly open crossover. And we look at the first day of the week. That's the range, the high and the low. And we pretty much trade this like the same way we trade the wick zone. We're looking for the breakout. So here on the you can almost think of it of the breakout of first day of the week. You could almost do the wick zones for the first day of the week. If you think about it, you see how that would work. The only line that's not there is this one right here. But you can see Tuesday, we had a nice trade out of the zone. We had a nice trade out of the zone yesterday, Thursday. And then we actually entered into the first day of the year, first trading day of the year's range, and we exited out of there. And also barely in the first day of the month, and we exited out. So you can see how those work. And if you wonder, I use different profiles on various days of the week, so that's why you might see something usually on the first day of the week and the last day of the week. I'll use the profile that you see here. So there'll be some charts that show only on Monday and Friday, and some charts that show on the rest of the days, just depending on what I'm emphasizing that day. And here we've got price above all the opens for the last 12 months, the first day. And you can see here we're now above all the opening day ranges for the past 12 months. And there's still a couple traders out there like to use the semaphore. I just kind of use it as a heads up. It's like, oh, it just put in a 3 ball. So now I'm going to be looking to go shorter. Hey, it put in a 3 ball. Now I'm going to be looking to go long. And we had an inside bar a couple of days ago, once again, showing just how profitable that trade can be. And you see we've got a few other pairs that are showing inside bars. So actually today is day 10 of trading the EUR AUD, but it didn't show you on that first screen. So I think people might be thinking I'm missing a few days, but no, I just didn't label it that way. Also, fellow traders, keep in mind these videos are for educational purposes only, and your results may differ from mine. And trading, especially forex trading, is extremely risky. So if you need advice, seek it from an accredited financial professional. Because at least then when they lose your money, hey, you can say, well, it was a professional that lost your money. Okay, enough of that. Daily range 1, 2, 3, 4, 5, 6, 7 over 100 with the pound right there. That must be rounding up to 100. So there was definitely movement on the pound pairs today. And you can see once again exiting out of that low. Previous day's low crossed right out of it. The H1 highest open, you can see, was put in early in the day. The lowest open just a few hours ago. And you can see it's above the monthly D1 lowest open. And here's the H1 lowest open. Way down there, I have to move the chart, scrunch it down, and there's the yearly H1 lowest open. So the highest open, lowest open, or holo trade. Once again, that's one of the ones I look for day trading, because price will make a high and retrace and will make a low and retrace. So you want to you do it with the lowest and highest open, so you'll have the candle color in your favor when you enter that trade. Okay, pivot point trading and the buy zone. You hear trigger long towards the pivot point was up here, so it was a long bias, but right here price is failing, so we should be taking profit. Definitely. I mean, you might have wanted to hold here, but as it broke through there, that's telling you it's time to take your money off the table. Then price broke short, lower open, and then the rest is pretty much history. Back to the daily open, and then down once again right through the short zone here. So remember, I picked the Euro Aussie short trades. It's not that I have a crystal ball, because it has been very profitable, very nice trading. It was mainly due to the swap, because sometimes I hold overnight and I just didn't want the swap to eat up into the profit. But as a rat, usually I'm a green rat, but on this particular pair, I trade in one direction, because that cuts down on a lot of variables, because now I can only be wrong if price goes up. But if I keep switching back and forth from red to green, I become a Yale student, because the Yale students got beat by the rat. And you can look at my videos that talk about the rat, and you'll understand. So by just picking and trading in one direction, I can increase my chance of being profitable. Because what's the worst thing that can happen? If I started going short here, I stop out. And then if it comes back here and I start going long, I stop out. But if I'm only going one direction, then especially when you use the same method, then you could be wrong all the time. Like if you flip the coin, most people talk about coin flipping. It's like heads I buy, tails I sell. Well, how about heads you wait, tails you sell? I mean, think about it and see what happens. I'm sure there's probably somebody out there would write an EA to see which way would be more profitable. That would be interesting. And no, it won't be me because I'm not an EA kind of guy. I don't put EAs out there for public consumption. Too many things can go wrong. But here we go. Green rats feasting right here. Red rats got a little taste there because at this point wasn't enough range, but you see we got a 100 pip range. Now there's room for price to range. And probably right here the green rats may have gotten some cheese too. And on the pivot, let's put this back to H4. You can see we missed that pivot there. Let's run through the rest of these charts quickly. We took out all the pivots this week. But we do have 3 missed pivots for the month so far. Had 2 in July. So let's see which one of these gets taken out next. Price action, simple. 3 ball at the bottom, green at the line. Remember, where price opens, usually the high or the low is going to cross one of these lines. You can see how it happens here. 2 ball at the top, red at the line. Once again, opens here. It's not going to stay between these two. But remember, that's on this pair that has a big hourly range, but 2.2 spread at the moment. It's usually over 2. So you're giving up 2 pips straight out of the box. Here's our wick zone. Somebody was asking me about setting parameters. You don't have to do anything to the wick zone. It's just a standalone indicator. It's high, top, bottom, low, but that was a mouthful, so we just shortened it to wick zone. Why isn't this closing? Okay. Just the previous day, week, month, open, high, and low lines, trading across those, which is similar to the wick zone. But I do it across the 3 different chart periods. And you can see here, not much movement on the tick chart. The Einstein line showed a short here. That didn't stop out. So just kind of riding price. Maybe you're up about 3 or so pips. Once again, you just take money when you can. And don't listen to the people who are poo-pooing methods because you might only make 3 or 4 or 5 pips at a time. For some reason, the markets were pretty active this week, volatile and range, but we had that long dry spell where you just had to grind out the pips. Just don't worry about what other people say. Focus on your method, your portfolio. Seeing where there's highs and lows to be taken out. And at the open lines for Tokyo, Australia, right here you see a reversal right around that open. On the range, week 315, and for the day 100. And you can see where price went in relation. Once again, ATR plus or minus 50. I'm sorry, the open plus or minus 50% of the minimum and maximum, giving us our A2R zones, and here the targets, and showing trading that weekly open cross. You can see just how effective the buy zone, using the first trading day of the week, using that as a buy zone, how profitable that can be. Well, that wraps it up for the week, fellow traders. I hope You had a good, profitable week. Have a safe weekend. And remember, it's not what you trade, it's how you trade it. So when you come back next week, drain the banks.